the ERC credit, the Employee Retention Credit, it's still available. So if you was operating in 2019 and you have employees, then this video may be for you. Let's dive right in. So what is the Employee Retention Credit? The Employee Retention Credit is a credit that was basically established during the pandemic. And they had this credit, they also had the PPP, and they also had the EIDL loan. The situation was that the PPP got more popular than all of them, and a lot of people was not looking into the retention credit, the ERC credit. At that time, you wasn't able to get the ERC credit if you had PPP. But after they switched that, and if you received the PPP, you can also receive the Employee Retention Credit. And it comes in a check form. Another great thing about it is that you do not have certain things that you have to spend it on, such as the PPP, which was only for employees. You have to pay for payroll. You have to do it with restriction. This money, they give it to you back in a check, and you can do whatever you want with it. So, assuming most of you guys will use it towards your business regardless, but the good thing about it is that there's no restriction on what you could use it for. Now, how do I qualify, right? So there's two qualifications. Basically, one, if your business was in a mandated shutdown, such as New York City, you qualify for those quarters. So it's quarterly. Basically, what they're doing is they're going to check to see if you were shut down, you were still paying your staff. They're going to see how much you was paying them. They're going to give you money back. Amazing, right? They're going to give you money back. So if you have 5, 6, 7, it starts getting real high. I started seeing people getting almost $1 million because they had a lot of employees. So this is a big, big thing right now. And another great thing about it is it's not taxable, okay? But let's say you was not mandated to shut down. How else do you qualify for this? So they want to see a loss in revenue, right? So if your business suffered a loss in revenue, then you qualify for it, but it has certain criteria. So for 2020, if your business suffered a loss of at least 50% compared to 2019, then you qualify. You will have to literally look at 2019 quarter one and look at 2020 quarter one and compare them. If you see that you lost 50% revenue, you qualify. And it will go for each quarter. Then in 2021, which was even better, it's not 50% no more. If you just reduce your income for 20%, you qualify. So if it's, once again, you compare 2019 to 2021 quarter, and if you lost 20% in revenue, you qualify. So this is for all 4 quarters in 2020, and you can also get 3 quarters, the first 3 quarters in 2021, because they eliminated the 4th quarter in 2021. So you could go back, what is that, 4, 5, 6, 7 quarters. If you qualify, you could get 7 quarters worth of payroll ERC credit back to you. So that could be really, really big, and is actually a lot bigger than a lot of PPPs. Okay? So another important thing is that you have to have W-2 employees, not a contractor, not a 1099. It has to be a W-2 earner. So this person has to get a pay stub, and you have to see taxes withheld from it. The Social Security taxes, the Medicare taxes, the federal withholding taxes. You have to see that come in out of your check, out of your pay stubs. And that's how you categorize if you have W-2 employees. Because if you are giving cash or you giving through Zelle, or you give, that is not, unfortunately, a qualified employee, so you won't be able to get back this. You won't be able to use this credit. Okay, so definitely we said you need to either have your business shut down. You had to, for mandated shutdown, you have to lose 50% revenue in 2020 or 20% revenue in 2021, and you have to have employees. Now, the employees cannot be you, your husband, your son, your child, your cousins, your grandparents. They cannot be family members. It has to be non-related in order for you to be able to receive this ERC credit as well. So I know a lot of you guys, work with your husband or have the kids on payroll. You wouldn't be able to qualify. So if I put my predicament, let's say me, I have my kids on payroll, I have myself on payroll, then I have 6 extra staff. Those 6 extra staff is the only ones that they're gonna reimburse me for, not me or my children, if that makes sense, unfortunately. But yeah, so those are things to consider. And if you see that you lost the 20% or 50% in revenue, and you also may have been forced to shut down, definitely look into this. This is very big. We are also here to assist you with that. This is something that I see not a lot of business owners are taking advantage of, and it's a big thing. The inconvenience about this ERC credit is that you will have to amend your 941s, right? Now, when they amend the 941, then that means your portion of your 2020 and 2021 of the tax returns will be has to be adjusted as well. So you will have to amend your taxes as well. But depending on how much you are going to get back, makes sense, and it will be convenient for you. But you will have to look into that yourself and see if it makes sense for you to do all this. Most people, basically, this paid for the inconvenience, and they got a lot of money back and was able to use it for their business and grow even bigger and do a lot more with it. So if you have to just amend your taxes, that is nothing. That is nothing your tax preparer couldn't really do. It's 2 seconds. It's going to be a little fee, but it's okay because it's going to be worth it. So definitely look, check your numbers, see if you have lost revenue, see if you qualify for this. You need your books in order. Definitely contact me. We do bookkeeping. We could help you with this. We do amendments. We do it all. So I'm here to help you. I don't want you missing out on this. This is big. This is huge. This is money just sitting there that only the big business owners are taking advantage of, and our small business owners are not. So definitely look into it. If you need assistance, my number is down below. And I talk to you guys on the next one. Bye.